Bitcoin just reclaimed $80,000. Over 150 million in short positions were liquidated. That's not normal volatility. That's positioning getting wiped out. At the exact same time, Wall Street is quietly shifting back to risk on. Small caps are breaking out, institutions are nearly fully allocated, and retail still waiting for confirmation. But here's the problem. By the time the market feels safe again, the opportunity is usually gone, because the biggest moves don't start when everyone agrees. They start when most people are still unsure. This content is for informational and educational purposes only. Always do your own research before making any investment decisions. Welcome back to Ledger Pulse, where we break down what's actually happening across crypto, macro, and institutional money flows without the noise. Let's start with this. According to CoinMarketCap, Bitcoin has officially reclaimed the $80,000 level. Now on the surface, that might just look like a number, but psychologically, this is a major shift. Markets don't just move on fundamentals, they move on belief. And when a key level like this flips from resistance into support, it changes how participants behave. Now layer this in. Watcher Guru reported that 150 million in short positions were liquidated in just 60 minutes. That's not organic buying, that's forced buying. That's traders who were betting against the move. Being forced to buy back in at higher prices. This kind of move doesn't just push price up, it accelerates momentum. Because once shorts get squeezed, there's less resistance above. And that creates air pockets where price can move fast. Now zoom out. Plan B has been saying this was a mid-cycle correction. Not a top, not the end. A reset. Historically, cycles don't peak once, they peak twice. The first peak creates doubt. The correction shakes people out. And the second peak? That's where euphoria shows up. Most people interpret volatility as weakness, but in reality, volatility is redistribution, from impatient hands to patient capital. So if this was a reset, what we're seeing now is the next leg forming. Data from the Kabisi letter shows high net worth individuals now hold 65% in equities. Cash levels are near multi-year lows. Let's pause right here, because this destroys the narrative that big money is waiting. They're not waiting. They're already deployed. Markets don't wait for retail. They move ahead of it. By the time the average investor feels confident, the positioning is already done. This tells you one thing. Risk appetite is already back. According to Tom Lee, retail missed the bottom. Stocks already ran, now sideline money is chasing, but it rotates into small caps, mid caps, and crypto. Also, we've seen the Russell 2000 hitting new all-time highs. That's not defense, that's expansion. Early cycle, large caps lead. Mid cycle, everything expands. Late cycle, speculation explodes. This rotation, it's the bridge. And here we have a post from Crypto Wizard, focusing on Cardano. We've been seeing growing attention around Cardano, following a familiar cycle structure. Compression, breakout, expansion. It repeats. Altcoins don't move when things feel safe. They move when liquidity expands, confidence builds, and Bitcoin stabilizes. If those conditions are forming, altcoins are next. Now zoom out even further, because this is where things shift from price to structure. We're watching the foundation evolve in real time. BlackRock is pushing to expand rules around tokenized assets, especially what can be included in reserves. That opens the door for treasuries, tokenized funds, and yield-bearing instruments. This isn't about hype. This is about building the rails for capital to move faster, cheaper, and globally. BlackRock isn't chasing crypto. They're preparing for its integration. According to CoinDesk, the Senate has released compromise text for the Clarity Act. After months of negotiation, this is progress. Key elements here include limits around stablecoin reserve yields, support for activity-based rewards, and clearer regulatory boundaries. This is the shift from uncertainty to structure, not killing the industry, but defining it. Cointelegraph reports prediction markets give this a 63% chance of passing by 2026. Markets don't wait for laws. They move on expectations. The release of compromised text isn't the end. It's confirmation that progress is real. Why does this matter? Let's connect it. BlackRock is building infrastructure. Lawmakers are aligning on the rules. and markets are pricing the outcome. That's coordination, and coordination unlocks scale, because capital doesn't flow into uncertainty, it flows into systems. So let's put it all together. Bitcoin reclaiming strength, shorts getting liquidated, institutions already positioned, small caps are breaking out, retail rotating late, and regulation is taking shape. This is not random. This is early expansion. Messy, uncertain, but directional. The hardest part isn't calling the bottom. It's recognizing when the environment has already changed, because it never feels obvious, until it already is. If you want clear, signal-based breakdowns like this, make sure you're subscribed, because the next phase of this market moves fast, and by the time it's obvious, it's already priced in. If you like this video, please hit the like button. This is a new and growing channel, so all of your support is greatly valued and appreciated. And if you want to hear more breakdowns like this, check out these videos here. Thanks for listening, and we'll catch you on the next one.